With trade tensions easing, gold is suddenly facing mounting pressure to pull back. Can prices still hold within the range we've seen since late April? And beyond tariff talks, what other forces could drive gold's next move? Find out in this week's episode of As Good as Gold. Greetings, fellow traders. I'm Dylan, a research strategist at Pepstone, presenting the latest weekly update on As Good as Gold. So gold came under notable pressure last week as a breakthrough in trade negotiations and fading U.S. recession fears turned into key headwinds. That said, uncertainty around further tariff talks and the Fed's rate cut path has helped put a floor on the prices, at least for now. So now if we take a look at the gold against US dollar daily chart, bearish momentum has been quite strong, with gold dropping as much as 6.6% from recent highs. Prices are now hovering near the lower bound of the range established since late April, around $30 to $40. A clean break below this level could open the door to the next downside target near $31.67, the early April local high, and the 50-day moving average. While on the upside, the 5-day EMA and the range top near $33.80 may act as resistance for both. So interestingly, the sharp pullback in gold has mirrored the easing of trade tensions, marking a sharp contrast with the South American narrative that dominated a month ago when, fears of a trade war were intensifying. First came a US-UK agreement to keep the baseline 10% tariff in place while slashing auto tariffs from 25% to 10%. That was followed by a major breakthrough in US-China trade talks. Both sides agreed to cut tariffs significantly and supply a uniform 10% rate, with the remaining 24% in duties suspended for 90 days. As trade tensions cooled, U.S. recession odds priced by betting markets dropped by 11 percentage points to 39% at the moment. Add to that the recent easing in geopolitical risk, and you have a swift drop in safe haven demand that triggered a retreat in gold buying. At the same time, U.S. 2-year yields climbed back above 4%, and lower inflation expectations have lifted 10-year real yields, both bearish for non-yielding assets like gold. While still, April's US CPI showed signs of cooling, with core inflation rising just 0.2% month-on-month, below the expected 0.3%. That lends support to rate cut hopes. And while trade tensions have somehow temporarily eased, markets aren't letting their guard down just yet. The US still faces massive debt, deficit, and longer-term fiscal concerns, all of which help limit how far gold can fall. So all in all, bears have taken control of gold over the past week, and the metal is now defending key support at $32 to $40. As trade jitters continue to fade, a trend reversal may take longer to materialize from a personal perspective. And a decisive breakthrough below $30 to $40 could add to the downside pressure. While looking ahead, Thursday's US retail sales data and Powell's remarks will be key. The market is now looking for a 0.1% year-on-year increase in April's retail sales in the US, sharply lower than the previous 1.4%. A weaker than expected print, say a negative reading, combined with the more dovish tone from the Fed, could offer some relief for gold. But I feel like the more likely scenario would be Powell sticks to his wait-and-see approach. While lastly, gold ETF flows are worth watching as well. Global physical gold demand rose just 1% year-on-year in Q1, the strongest first quarter since 2016, almost entirely driven by investment demand as central bank buying slowed and jewelry demand in China and India remained quite weak. If risk assets keep climbing and ETF inflows dry up, that could weigh further on gold bulls. So that's pretty much all for this week. If this video was helpful, don't forget to subscribe, like, and spread the love. If you have any ideas on how the upcoming data and events might impact gold trading, drop a comment below and let's chat about it. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!